Buddy, welcome to Bootleg Weekly. I'm on time. I cannot show you my phone because I'm recording with my phone, but just a second. So this stream is in protest to Tanner. I'm here. I'm never late. Yes, thank you. Tevis is never late. Welcome to the FinTech Frenzy. We've got the music. We're on time. What's up, everybody? We have Steven here because we're protesting. And on this episode of the FinTech Frenzy, we have a special guest, very special guest. No, it's not Roy. Roy is going to be 5 to 10 minutes late. He makes his own schedule wherever he goes. He just told me the time, and now I have to.
You know why? Because time waits for Roy. Roy doesn't wait for time.
Time waits for Roy. Roy does not wait for the time. Everybody, please join me in welcoming a very, very special guest to the FinTech Frenzy. Tanner, welcome. Welcome.
Hello. Right
See,
on time.
We had to ruin his night.
It's like
In our group text, he had this whole thing about why he couldn't do a podcast tonight, about all these things. So we said, you know what? You don't make the rules. We're protesting. We're podcasting.
Yeah,
Play weekly, and he's here.
Yes. Very special guest on the FinTech Frenzy, the show that I do every day with this background music.
I thought this was the Bootleg Weekly. You keep calling it the FinTech Frenzy.
Special
the real
guest
show that's on at 8:30 p.m. right after this.
Should we just remove him, Steve? Let him wait back.
I mean, if he's going to be like this, I mean,
That's all I needed.
he may
do you
just
guys
get
not
kicked
see
off
my-
his own show.
What does that say there, Steve?
He's on for like 10 seconds and immediately starts referring something.
God, I love it.
I'm turning off this fucking music. So
Thank you.
yeah, fuck. Can't do it.
Elevator music.
Oh man. So we wanted to talk about Sofi. We wanted to talk about PayPal when Roy gets here. We wanted to talk about maybe Tesla if there is time. There's been news around that as well today. Steve, where do we want to start?
Let's just do a very quick recap of SoFi, and then we'll dig deep into it on Friday.
Very quick recap of SoFi as a little appetizer for our Friday show, the SoFi Weekly podcast. Roy says soon, so everybody's waiting on Roy now. What did you guys think of the earnings at a high level? Captain
I
Referral?
think it was amazing.
Yeah. I think it was super great. And I think that we're going to beat expectations, especially on lending, as people realize that the environment isn't as bad as what they're projecting. They're being extremely conservative.
Look, the fact that Noto came out and he said, we're going to give you multi-year guidance. We're not just going to guide for 2024. And they gave us a legitimate range for EPS in 2026, and then went a step further and told us what we can expect for EPS growth post 2026. And they outlined a lot of the things that they are looking to accomplish over the next 3 years. We finally have a real picture of how the roadmap is going to unfold for them to become a top 10 financial institution. And when you look at a forward PE based on the range that Noto gave us, it does not look expensive at all. And I am more bullish than ever. I'm glad I was buying last week. And you know what? I am probably buying tomorrow because I think it finished around 838 or 840, somewhere in there. Goes down a little tomorrow. I'll be buying more.
Yeah, everybody was really, everybody. I saw a lot of people on X who were panicking that the stock was down slightly. You know, after we bounced into the $9 range, now we're back to $8.50 or something. You must be new here, man. If you're saying why is SoFi stock down immediately after an earnings, you must just have bought in like a week ago.
It's par for the course.
It's par for the course. Exactly.
In after hours right now, the stock's holding at 830. But like Steve said, like as the fundamentals get better over time, that increases the potential fair value of the company. So the willingness for me to buy as the price goes lower actually gets higher. Like I'll probably buy within the sevens whenever, if it breaks back down there, I might increase my position. But I'm already holding a lot already.
I mean, I outlined a lot of the stuff. I was going to write a really, really long article, but it was about 2,400 words. I was thinking about doing like a 4,000 or 5,000 word article. And I was like, it's going to be too much. I'm going to break it up and we'll talk about some of the other stuff. But the fact that their members keep growing, the fact that their deposits keep growing, their deposits grew by 11.3 billion over the past year. And when you put that in a percentage perspective, 153.61% year over year growth in deposits. It doesn't matter what anybody thinks except for their members, because they are the customers and they are voting with their paychecks, they are voting with their capital, and they are voting with the bank that they want to use, and they're choosing SoFi. If SoFi did not have a good product and if people were not happy with it, they wouldn't use it. So the bottom line is they keep growing on all fronts.
Mhm.
So any of these ideas about cyberbank not really working, cloud banking not working, any of that stuff, it's just not true.
Look, the earnings itself was spectacular. All of the major targets that they had promised, they kept those promises. They delivered on. But I think the factor that made it a 10 out of 10 earnings for me was purely Anthony Noto's sentiments towards the end of that earnings call and the prepared remarks they had for 2023 through 2026. This medium term analyst forecast that they essentially, somebody's asking for the music back, they essentially guided for a clear roadmap of growth that analysts can now forecast out, do the EPS, do the forward price to earnings ratios, and actually put that into their models. And the funniest thing, and I included this into my my earnings recap that I put out earlier today, this morning, basically saying that if you look back to the transcript at what Anthony Noto was saying, he was saying 20% to 25% revenue growth without accounting for any major investments, without accounting for any major, product lines. And I was like yelling
Any change
at
in
the
macro?
camera. Yeah, without accounting for, yeah, exactly. And I was like yelling at the camera saying, guys, they're expecting 5% unemployment. Not going to happen. Guys, they have acquired 4 companies in 3 years. Like, they put their first slide of their earnings report presentation. Here's all the new stuff we released this year. Do you really think that they're not going to be launching new business lines in the next 3 years? And even on top of all of that, which is ironic in itself, Anthony Noto even said, it doesn't account business lines such as SMB lending. It doesn't account SMB, all of these different
Let's save that for Friday night, Tevis, because
maybe
we're going to spend a lot of time on that. But I wanted to show this. So I put this in my article on Seeking Alpha that came out a couple hours ago. So if anybody wants to read the whole thing or see this stuff, you can. But this slide is so important because this is the slide from 2021. No, I'm sorry. Was it 2021 or 2022 when they acquired Technis? Q1 2022.
Yeah, Q2 or 2022.
Hold on.
So
I'm gonna have to interrupt you, Steve, and I actually interrupt all of you guys because there's someone very special here. Okay, and I think we need to roll out the red carpet. Roy,
I'm here.
welcome.
We can start the show now, guys.
Screw all of these losers. Let them all wait backstage. How are you doing, Roy?
Well, I'm glad you asked. I forgot to tell you I'm on Central Time, not Eastern. That's my bad. So I am impersonating Tanner tonight. I'm late.
It's okay. You don't need to respect time zones. All right, I'm gonna bring these guys back before they riot on me.
Yeah, actually, I go up there and everyone goes over here.
My brain hurts if it's not like that.
This is perfect right here.
See, Roy's in the number one spot. Perfect. Tanner, do you mind bringing my screen up again, please?
Actually, it's me.
I'm sorry, Tavis.
Bootleg Weekly.
Bootleg Weekly. I'm sorry. So this is the slide from the transaction overview from the Technis transaction, and there's been a lot of debate over the past 2 years about this. And look, the bottom line with this transaction, and I said from the very beginning, I don't care about the price that we paid for it because it was all shareholder dilution with issuing shares. And it was for good reason. When you look at how much the savings is, 2023 was the first year that the cumulative cost savings set in. And through 2025, we're expected 75 to 85 million in annualized savings, and then a run rate of savings between 60 and 70 million annually every year after. Technis could bring in $0 and it will eventually pay for itself. In addition to streamlining everything and allowing SoFi to build the AWS of fintech, which we will get into on Friday night pretty deeply, but this is a critical thing. And you can see from them becoming GAAP profitable this year, a decent amount of that was because of the synergies from all the businesses that they've acquired. This company is doing all the right things. And it's really crazy that people are not believing the story still. It's crazy.
Yeah, I saw some people saying today it's a dying company and it's going to go bankrupt, and it's like, okay, at this point you're just delusional. I don't know what to say. They've executed, they continue to execute. They've given long-term guidance, which usually the market loves when there's less uncertainty. I think it'll reward the company over time. And just short-term, anything can happen, including on the 8th day.
Yep. I just received some news that our favorite Miss Kathy Wood bought the SoFi dip today, 290,000 shares. I think this just came out. The email just came through 8 minutes ago.
Nice.
So love to see it. I love to see people buying the SoFi dip. To all the people on Twitter that are saying, why is SoFi down? You know,
just kind of
you can either complain or you can buy more, baby.
Yeah.
Powell
could screw us tomorrow.
Yeah,
he really could screw us tomorrow. Let's not forget that.
Yeah.
This is, though, exactly what you want, as long as you have money. If you don't have any money at all, you don't have anything left, you're all in. And that happens to me sometimes. It stinks. But if your company is executing, that they're delivering phenomenal results, and that's exactly what we have here, and the price tanks, dude, that's amazing. Like, it's just such a killer opportunity. I talked about this last night with Robinhood. It's like my hope, even though I'm invested in that company, that it just tanks on good earnings because of a couple of things that I'm expecting. And I'm going to load up on that. SoFi is doing that right now. If we get in the sevens, like these guys are saying, I'm going to add quite a bit more. So I'm very excited because we have the long-term horizons. Just ignore the noise short term.
Yeah, I mean, there's only so long that you can keep a company under a 1x PEG ratio. And that's like, I'm curious if you did any, or are you saving this, Steve, any long-term projections?
Steve is kind of busy right now, Tanner.
I can do two things at once, sir.
Did you do any long-term valuation projections for SoFi in your latest article? Like, did you talk about if they do hit their assumptions for 55 cents to 80 cents EPS by 2026?
Yeah, I put the range. I mean, they're trading at, I think, like an 11.4 to 16.5 forward 2026 PE based on where shares settled yesterday.
Yeah.
I mean, it's even cheaper now because shares fell by 8% or so.
Right.
We'll run the numbers live. And I was figuring that we could put some models out there. Is when you think about how much growth that is over the next 2 years, because this is fiscal year 2024. So we only have 2 fiscal years before we start getting into those forward 2026 earnings. There's a lot of growth that they're going to get. And looking out 3 years, this is a crazy low price because when you think about the companies that are actually trading in that 11 to 16 times earnings, you're talking about Verizon, you're talking about Southern Company, you're talking about Altria. Well, Altria is probably closer to 9 or 10 times. But
what he means is you're talking about cheap boomer shit that grows single digit year over year and not a company that's growing 35%.
Yes, exactly. So we can do that live.
Yeah. Shall we pivot and actually save some SoFi for the SoFi Weekly? And
let's go into the other stuff.
Roy, lead us through the discussion around this PayPal layoff that was just announced today.
Yeah, something that when Alex Chris first came and led the Q3 earnings call, there was a lot of allusions towards cost reduction, in improved automation, removing some reduplication. And many people, myself included, thought it meant layoffs, in addition to some other things. Layoffs didn't come before Christmas. I was thinking they probably wouldn't. PayPal kind of had a history of doing it. Really, at about this time last year, I think it was on the 31st, PayPal had announced a 2,000 person reduction of the workforce at 7% of the time. Today, they announced 9% reduction. You guys are great. 9% reduction.
What's wrong? Why are you laughing?
And 2,500 people that were cut. And so this was actually a little bit less than I expected. They may do multiple waves of cuts. We just don't know. We don't have any certainty of that at all. We don't know who's being cut, how those trims are going to come. I expect that we'll hear a good bit more about that with the forward guidance that's offered here in the earnings that's coming up in very shortly, actually. So, yeah, this was much, very long expected. The stock moved up a little bit, fell back down like everything else because apparently the economy is dead and people are getting laid off. And so this is 2008 all over again. I don't know. It's that narrative. So.
Yeah, man, it seems like in short succession, Alex Chris is making some moves. Oh, look who we got. Riley. Wow.
Riley.
Riley, good to see you, man. Welcome. Yeah.
I was just talking with him today.
Yeah, seriously. Riley, if you want to hop on, let me know and I can drop you a link. Drop me a DM on Twitter.
That probably is not going to happen.
Yeah. Well, I mean, we never know. In short succession, it seems as though Alex Chris is just making moves, right? You had the Shock the World event, which was, by and large a disappointment to the market, and then some cuts, streamlining, and we'll see what happens for earnings, right? Alex Chris really only has one quarter under his belt so far, and so largely unproven.
Yeah, I think that he's been a man that keeps his word. Like that's just what he has been throughout his whole span. He wasn't misleading people when he was talking about efficiency gains as far as reducing and eliminating a lot of costs. Last year, we saw PayPal, well, as long as Q4 numbers hit, we're going to see a 21% growth in non-EPS gains. A lot of that was because of the pay cuts, the efficiency gains, some other things that they eliminated as well as just general improvement in that area, cost efficiency. And when Alex Chris came, that was one of the things that surprised me with Q3 is he alluded to, he's basically said, hey, we're not done with that at all by any means. And it sounded like they were just getting started. So I would not be shocked by beating that when in their guidance. I don't know if they'll guide for it necessarily, but at least a 20, if not higher percent of non-GAAP EPS growth. I would expect more, but they may guide for a little bit less. Everybody tends to just softball it a little bit.
I think that this is it sucks to hear, but it's something that has to happen. like we want margins to go up. The company wants to grow. They're losing market share in certain areas, but still maintaining a very, very sizable business. And if Alex Chris comes in and just realizes that a lot of these people may have redundant work, which is usually what can happen whenever new management comes in. You come in with a fresh set of eyes. It's time to get rid of 9% of the company, and potentially that runs to help their operating expenses.
Yeah,
and their operating margin. If that also coincides with them seeing an inversion in their transactional margin, we're going to see an amazing Q4. We're not going to see the update of what just happened in Q4, but the news will be there.
We got David Cavarini in the chat with a $3 price target on Sofi. Guess Roy, you're turning him into a believer.
Wait, that's not really him. Stop.
No,
man, come on.
I was going to say, get him on here right now.
Oh yeah.
I was just listening to the Lending Club earnings, and I was going through his price targets on Lending Club and his price targets on SoFi, and he has them like very, very close in terms of market cap. Lending Club. So he's saying Lending Club will be around $8, which is kind of what it is right now, and that SoFi is going to drop by 66%. So just like a crazy assumption. not pricing in any of the tech platform bonuses or the fact that they're originating twice the amount of loans or anything along this line, even more than twice the amount. It's like 3 times the amount. They're not even close to the same company.
So,
Anyway.
so let me pose a question. I don't think SoFi is going to 3. Like, things would have to just absolutely be abysmal.
Friday.
Okay.
We'll have
Remind
nothing to
me.
talk about otherwise. Like, what
Yeah,
are we
yeah.
going to talk about?
Alternative assets?
Yeah, we're
We
going
could
to
do
talk
that
about
for
the
a long
dividend
time.
weekly.
No, but when it comes to the layoffs, I'm not necessarily happy about it, to be honest with you. Like, there's a lot of companies that are laying people off, and I worry about what that says about the economy and what that's going to do to the economy and the ramifications of what's going to happen. Because when you really think about the number one factor for a recession, it's unemployment rising. It is not an inverted yield curve. So
Yeah.
there's a lot of companies. It wasn't just PayPal that laid people off. So that
UPS.
really worries me. And there needs to be a fine line between the two. I mean,
But I don't think it should, man, because the blueprint is already out there. There's a lot of layoffs in January. There's marginally less in February. And then it sort of plateaus off for the rest of the year until next January comes along. It's just when you're talking about single digit percentages of layoffs, it is housekeeping. Okay. A large part of it is
yeah,
housekeeping.
they're doing a riff. They're taking an annual riff style. I get it. It's just, it's not easy to watch. And
The truth
the
is,
amount of companies doing it is concerning.
yeah, the truth is, like, when I posted about the PayPal layoffs, people were and I said bullish for PayPal, like the ticker symbol. People were like, "How dare he say layoffs are bullish?" Yeah, it is bullish for the stock, and investors are obviously taking it as a bullish sign because you get your operational costs, your operational efficiencies in order. And when you think about it, you have entire cohorts of people that were hired back in 2021, and likely because you had a different market, you had the zero interest rates and all that, these people were paid a premium for the work that they did, and now the market is normalizing again. And the other thing to remember, yeah, sure, I hate layoffs like on a sentimental perspective just as much as anybody else, but I realize that they are a reality of the world
Sure.
and how these businesses operate from an efficiency perspective, because again, companies do not lay off their best 10% of employees. Generally, it's their underperformers who are overpaid for the work that they're actually completing. So this is just the market's way of normalizing.
So because I just saw a comment, and this was from something that came out earlier today. I think that maybe this does play a role into maybe the way people are looking at PayPal as well, or just specifically asking Roy, obviously. Roy, do you think that UPS laying off 12,000 people due to low shipping volumes has an impact on the e-commerce giant PayPal?
No, they're global. UPS is a different player. UPS, they increased their operating expenses quite a bit with the union settlement, and I don't think that these are union drivers that they ended up firing. It's the non-union people that are easier to get rid of. It's sad, and I'm with Steven that I don't love seeing people laid off. I was laid off in 2008. I don't think I've shared that here, but it was not fun. Tanner's getting laid off apparently. I mean, but honestly, PayPal is a global giant.
I'm packing my bags soon.
Bottom
UPS
10%, baby. Bottom 10%. We need to increase efficiency in this pod. You do nothing. You do zero research. You do zero due diligence.
I'm not worth my pay.
Yeah.
All of us will double our pay and you get less. So, but no, honestly, Visa had their earnings last week, and they had a absolutely rosy view of the consumer health and the economy. It was very, very good. And there is no company out there other than maybe JPM that I think has a better read of the global economy, but especially the United States economy, than Visa. And so I would much rather trust them. And of course, we had jobs data that came out actually a little bit hot, which is really good. Normally, right now, good news is bad news. So UPS laying off, that's a UPS issue. And it's actually not uncommon, if I'm not mistaken, correct me if I'm wrong, for UPS to do a little bit of trimming after the holiday.
And don't forget, UPS can't deliver services. A good amount of what goes through PayPal's system is services. It's not just hard goods. and you're using it for payments, you're using it B2B. There's a lot of other things that are occurring. What is going on here? Are there just jokes flying around that I'm not watching on here?
I
Yeah,
normally try
they're
to watch them later, but
they're constant. It's I think that's
This is
honestly
amazing.
what this community has become is they just want to make Tevis laugh as much as possible.
I
Dude,
love it. It's great.
Somebody commented a while back. He's like, "All right, guys, stop with the Roy jokes already. I'm already sick of it." It's like it's been like 4 days, and people are like just still going.
It's freaking great.
I agree with this comment. But
Somebody's-
okay,
It's freaking great.
so have we exhausted the PayPal conversation and more layoffs? Like, there's going to be more layoffs in January. It's going to happen. Probably February, there's going to be less, and so on and so forth. We'll see what they report, right? These layoffs are not going to affect their earnings that they report first week of Feb, I think it is, Roy.
Yeah. When is earnings?
Feb
let me
7th.
pull it up. I got it on my calendar. There's
But either way,
7.
they're not going to affect them, right? So it's going to be like more of a Q2 and, even a Q3, depending on how the severance breakdowns are.
Yeah, and I hope it's a good severance. They'll definitely take a hit. Quarter 1, quarter 2. But yeah, the earnings I think is just going to be all about AI, innovation, and efficiency, and better integration. And Alex Chris will lay out the roadmap for the whole year. I think that people are actually going to be very surprised by the guidance. A lot of what he shared on First Look are things that are pretty easy to implement. Can be done so cheaply, easily across the board. About half of them, and about the other half, they'll come through 2024 and be rolling out in the United States. But I think things are looking very, very good for PayPal as a company. Very excited where they're going, and man, I think quarter 4 is going to be actually pretty decent too.
And wait.
All right. Do we want to talk about this Tesla news? Probably imperfect timing because Tanner has to leave for his
ridiculous.
subpar show, which definitely isn't as good as Bootleg Weekly. We're going to bring the music back when Tanner leaves. Don't worry.
Are you talking about the FinTech Frenzy that starts at 8:30 p.m. Eastern Standard Time?
Nobody's going to leave this amazing show to go to your stupid show. Okay.
Sorry, let me rephrase. You're right.
Let me rephrase.
You mean the
don't
FinTech
have
Frenzy that starts
Roy,
at
okay?
8:30 p.m. Eastern Standard Time every day, even whenever the Bootleg Weekly is not going on?
What are you
Hey,
going to
you know
talk about?
what,
You're
Tanner?
going to
This
talk
is
about
now war.
new and Adyen and just boring. Like, we have
Okay,
Roy.
hold on.
What do you
hold
have?
on. This is now war.
I
We
don't
are
have
going to
Roy.
go head to head every night at 8:30 Eastern. We will be doing Bootleg Weekly in competition with Tanner, and we'll be giving out prizes.
Yeah.
And we'll be giving out prizes.
Wow. Okay.
Random money draws selected from the chat. Whoever brings the best joke, the 3 of us, and then Tanner, we're going to run your show to the ground.
I got course money now. Let's go. I'll do prizes. Let's do
Oh,
prizes.
trust me, that don't matter.
Yeah, no, I believe you. This dude's running around with an 8-figure portfolio. He's just willing to throw out all the money he needs.
Tanner, listen to the people. All right, listen to the people.
Be where Roy is. Honest, I want to be where Roy is. But I can't stay. Unfortunately, it's already scheduled.
Of course you can. You already blocked something out to come on Bootleg Weekly. Like you already changed your schedule around.
Are you going to talk about Nubank though?
Oh, this is a good prize to give out.
Yeah, I mean,
I like it. Autographs from Roy. Yeah, I like it.
That's honestly such a good idea.
Such a good idea.
That's awesome. No, I can't stay. I can't stay. It's already scheduled.
All right, well then get out of here.
All right. I'll see you guys later.
All right, thanks, Tanner.
Bye, guys. Thanks for having me.
All right. Well, the loser's out. Now we can chill and have a great time. Talk about alternative investments. Talk about whatever you want to talk about.
I'm not happy. I need to read more about the court decision, but I'm not necessarily happy about this.
Oh, about the Tesla.
Because all right, regardless of relationships with who was on the board, I believe his cousin or his brother was on the board at the time. And I believe at least one family member was. But put all that aside, he had to hit specific metrics to get that payout. Him hitting those specific metrics made a lot of people a lot of money and created shareholder value. He hit those metrics.
Yeah.
Like, what is wrong here?
Let me explain very simply put what the problem with this is. Okay, first of all, this is shit that happened in 2018. Okay, and Tesla hit those metrics, so this is stupid just because it's retrospective. On firstly, secondly, the person that started the lawsuit had 9 shares. Okay, so let's.
Stop it.
Yeah, I'm pretty sure. So let's just consider that it's somebody with 9 shares versus hundreds of thousands of shareholders. Third, the judge in this case was the same judge that basically forced Elon to buy Twitter in Delaware, Biden state. So, I mean, I don't know.
You think he
Thoughts?
just doesn't like Musk?
Bro, if
Look,
they're
none of us are lawyers, but at the same time, I would need to read more into it. But the board signed off on the proposal. If there was a real issue, shareholders could have protested or could have wrote letters. I don't know if that happened or not, so I would need to do more due diligence. But for Elon to get that payout, regardless of how you feel about him, means a lot of people made a lot of money and shareholder value was created. And that's the biggest thing. Like, this was not an easy number for him to hit, and he hit it.
Yeah. Look, man, at the end of the day, the board are not a group of dummies that would just willingly give this guy, $50 billion plus. Obviously, everybody on the board stood to get very, very rich if those targets were hit. And it was out of a mutually beneficial thing. And then, like Steve, yeah, sure, we're not lawyers, but there's got to be a basic rule where the same judge can't rule on your court cases like twice in a row. I don't know. I
don't know. I mean,
there isn't.
think about it like
There
this.
I mean,
If SoFi hits 35 in 2026 and Noto gets part of his PSUs, there going to be a lawsuit about that? I mean, think about that.
No. I mean, if somebody with 9 shares decides to sue, maybe.
Like,
SoFi,
what is this person
hold
gain
on.
by suing?
SoFi is also incorporated in Delaware, by the way. So you could get the same judge and set the same precedent. And so, it's just risky, man, for all these companies. Nobody's going to incorporate in Delaware anymore. They're just going to move out of that fucking state.
Yeah.
I don't know. I want to read more into it. It just seems like so much shareholder value was created. It's hard for a shareholder to be upset about the compensation when it doesn't matter if you have 1 share, 9 shares, 1,000 shares, 10,000 shares. It doesn't matter. You made money. Like, if you bought shares at 40 and Elon's compensation package hits, if shares are at 500 per se, you made $460 on every share. Like, that doesn't make sense about why you're upset.
Yeah. Did you guys read Gary Black's comment on this?
No.
What did Gary Black say?
He basically said all that needs to happen at this point is the board just has to incorporate the language that the judge had indicated, and that they would unanimously say yes. They'd send that to the shareholders. The shareholders, I can't see them saying no to Elon, even if some people are upset at him for whatever reason, and then it's fixed. It's resolved. Going forward, it might change some things, he said. He said going forward, Elon needs to allow the comp committee and board to formulate his CEO comp plan independently. So, but I mean, he's still going to be able to speak into that. He just has to do it, more.
Look, I mean, if you take Tesla out of it and take all of this drama out of the equation, what it does is it sets this precedent that no public company out there wants set, because all of a sudden, you could have you put it in the hands of this external party, basically, and the board loses agency as a result. Like, the board of directors is there to enforce this democratic process whereby whoever holds the most shares, gets to eventually determine the direction of the company. Now, if you take it outside of that and anybody can sue for any reason to go against the board decision where the majority voted, then what the hell is it? Like, what are we doing here?
Yeah, I mean, look, I'm on a board, and the shareholders of it's not a public company. It's a private building that we all live in, and I am on the board, and the shareholders vote on the board members every year. Same way that when you are an investor in a public company, you get a proxy for your votes. Most people probably don't even look at it, but there is an election every year for board of directors. And you are allowing them to make decisions in good faith on behalf of the shareholders. Like it's just, I don't know. This just seems crazy.
Yeah, it's not a good precedent at all. And I think that they'll, pretty quickly rectify it at the shareholder meeting in the future. It'll be voted on. I don't see any issues, but it's a precedent that there really is the issue. You're right.
I
No
think
company
he's gonna fight
license.
this, though. I think he's definitely going to fight this. He's not going to let this slide. But I don't know what's going to happen, man. Who knows? But look, I posted on X and I said the silver lining of this was that this basically clears the path for the board to form a new compensation package to get him to 25% or whatever that may be. So we don't know what's going to happen next, but essentially the tweet that was controversial was where Elon said, hey, I don't feel comfortable making Tesla a leader in AI and robotics unless I have 25%, so that I'm a big enough factor to have a strong influence on the direction, but not so big that I can't be voted. People said this was bullshit because he had close to 25%, but he sold half of it to buy Twitter, and now he has about 13%. Other people said for the board to either buy back some shares, dilute a little bit to get him back to 25% so that he actually feels like he's motivated enough to divert his attention back to Tesla. However, it was a moot point because of this court case, which had been going on, which, by the way, the timing is really interesting too, right? Because the court case had been going on for years and that was blocking the board. And all of a sudden, a week after this happened, court case resolved. Now the board and Elon can hash it out and move forward from this, regardless of what happens with the actual appeal of the court.
Look, I'm all for buybacks, especially since Tesla issues shares left and right, which I'm happy about because I would rather them do that since they have such a strong base for people to acquire shares than take on debt and tap the debt markets. Very happy that they decided to fund the company that way because it's the smart move because they're in a position to do it. At the same time, I think that the solution I came up with, I'm not just saying it because I wrote it, I'm saying it because I think it really does make sense because it is a standard practice in several companies. Make an Elon class, make an F class, whatever you want to call it, of shares.
Yes.
I mean, it's not hard to do and have it be on a sliding scale. That way, when buybacks eventually do occur, it can reduce to keep him at 25%, or if they need to issue shares, it can increase, or whatever happens, just to keep him at 25%. Because you know what? Without him being engaged and without these AI products in Tesla, shareholders will be the ones that lose in the end because you're not going to maximize shareholder value. And that's what you want. So make it where there's a binding agreement that Elon gets an Elon class share that goes on a sliding scale to bridge the gap from whatever his ownership of the common is. And it always equals 25% with the common plus the Elon share, no matter if there's buybacks or dilution. And for that, he has to build all the AI products and bring them to market and have all the revenue and profit monetized through Tesla. It's a win-win for everybody. This could be done with a very easy special shareholder meeting. I can't see that anybody who is of sound mind would object to what I just said.
So real quick on that, Class F shares, they're founder shares. They are you can't sell them for anything. They're just used for voting, for controlling interest,
and they're not worth anything. It's just vote. We're not giving them extra money. It's just a vote.
It doesn't dilute the shareholders. It's great. The funny thing is, Palantir came out with that. They have a massive amount of Class F shares.
Zuckerberg can't be outvoted because of it.
Yeah. Like the founders basically they control the company, people made fun of it at the time. They're like, it's uninvestable, and they even at the time a company designed like Palantir wouldn't be allowed in the S&P 500. They've changed that rule with the S&P 500, and it seems that other companies are actually starting to see the wisdom of, maybe we should have something like that. Now, the one piece that I have heard, and maybe you guys can comment on this, I'm no expert here, is that once there is an actual IPO, that you cannot go back and change the balance of that. You can't begin to have a Class F share if you've already done your IPO. That may not be right, but that's what I've heard.
So
that may be a law. I'm not a lawyer. I don't know.
let me just present the counter argument of special classes of shares. Okay.
Oh God.
But okay. It's just a point that we can discuss, right?
Mm-hmm.
So 2 points. Number one is there is no contingency for these founders going off the rails, and it's essentially like this absolute dictatorship where all of a sudden, because the founder owns they can't be voted out, they have a complete autonomy over the direction of the company. It's no longer like the board is there as a mechanism to keep the CEO under control, similar to how, let's say, the Constitution is there to keep, these democracies under control. First point, right? So how do you protect against these founders going off the rails? Especially Elon, man. Elon starts a gazillion mini startups in Tesla. Like, he is so eclectic in terms of what he wants to do. If he he's doing robots now, right? Like he's doing so many different things. And yeah, they are accretive to shareholder value. They create shareholder value. My point is the board would be powerless to act if that were the case and if he had these types of shares. Number one. Number two, I think companies with this structure are less attractive as well for buyouts. This is more for like laggards and for established companies. I forget who it was. Maybe AT&T has this structure, but essentially, if I'm an activist investor and I'm a corporate raider, right? I'm a Bill Ackman or whatever, and I want to go into your company. I want to make some cuts, make some changes, turn the company direction around, and then sell out and bank on the value. I can't do that with a founder class shares because, again, I have no agency over the direction of the company. I have no say. It's all up to the founder.
And that's not necessarily a bad thing, because here's the counter to the counter. I just did the numbers. Vanguard, BlackRock, and State Street, just the three of them own 16.28% of the common shares in Tesla. Okay? 16.28%. They are allowed to vote those shares, and those are not owned by those companies. Those are owned by common people, pension funds, 401k plans, because their shares that sit in their funds that all of us invest in. These institutions should not be allowed to vote those shares because technically they are not their shares. They are shares that make up an S&P 500 index, total market fund, et cetera, et cetera. If you have institutions such as the ones I just named partner with an activist that have nothing to do with the company, they can make change that is not good for the company. And I would rather trust the management team and the CEO, because if I didn't trust them, I would not be investing in them. I don't want an activist coming in because, quite honestly, if an activist needs to come in, good chance I probably wasn't invested in the company. Good chance of it.
Yeah, I mean, as a on principle, I'm arguing against founder shares. I'm not cherry picking like this company or that company or this founder or that founder. I'm sure it's great. Like, there is an argument to be made on both sides. I mean, I think this is another one. Like, the founder can just sell all of their
Elon's not asking for a controlling stake. He can be outvoted. He just wants enough to be able to have a certain say. 25% is not unreasonable. That's
Steve,
if he had said 51%, I would have been like, no, that's crazy.
Steve, look, I have 50% of my portfolio in Tesla. Okay. I am totally a fanboy, but let's call a spade, man. This guy, he basically wants to crowdfund his dumb decision to go buy Twitter because he had 25% and then he sold half. What's stopping him from selling another half 2 years down the line when he wants to buy his next passion project, right? Like, I don't think that he should be in a position to hold the board hostage to act in the best, the best interests of the company going forward. To say, oh, I don't feel comfortable doing this. It's like, well, it's your job, so I would be totally on board with giving him more shares, giving him another incentive package, and having him essentially reach that level and grow to that level. Great. But if you make a stupid decision and then you come back and you ask the same shareholders who you've ignored with splitting up your mind share, your attention to your passion project, you ask that same group of people to crowdfund your stupid decision. I'm not about that.
Yeah, but he's gotten you this far building SpaceX, building Boring, building Neuralink. Like he's gotten you this far doing all that.
Tesla shareholders don't give a shit about that. If anything, that's all negative to Tesla shareholders because it takes away his attention.
So, Tevis, are you then against just like F shares going that route if it's possible for Elon, or against the 25% altogether as a shareholder?
No, I'm just playing the devil's advocate to say like, hey, it's not like if you think from a shareholder perspective, I'm here to make money, baby. I want to get a return on my invested capital. And yeah, he's done that historically, Steve. I get that. However, if you were to say, okay, we're going to merge Twitter, SpaceX, Boring Company, Neuralink, and Tesla into a conglomerate, and it's going to be called X, and I want 25% voting share of that, and everybody who owns Tesla stock is going to be converted to X stock, hell yeah, let's do it. It's accretive to me as a shareholder. It makes me money.
So
But when you say, hey, Tevis, I want to dilute you because I wanted to follow a goose chase to buy this dying social media company, then I'm like, wait a minute, how does this help me?
So you want to make money, you're a capitalist. Okay. You have half of your portfolio in Tesla. Okay. Doesn't matter if it's $100, 100 grand, 10 million, doesn't matter. 50% is 50%. You want to make money. If Elon signed something where all these AI things are brought through Tesla rather than another company, that puts you in a better position to make money on the Tesla shares. Rather than him going and doing this through a separate company that he's going to go raise money from, because he very easily can go raise money from a number of different places and do something on the side. I would much rather his attention be on Tesla and sign a binding agreement where we give him voting, not money, but voting to keep everything in-house, because that's where the growth is going to come from. We don't want him doing this on the side and making other people rich. That's the problem here, because he can do it and he will do it.
Totally agree. My point is, there's nothing. First of all, when you're talking about Elon, you and I and Roy collectively as a group of shareholders are agreeing subconsciously or consciously, whatever you like, if you've thought about that, we're agreeing to only settle for 35% of Elon's mind share, right? Because he has 5 other companies, whatever. Okay, so that's the first thing. His brain is always going to be scattered on other projects. So you can't fuck a binding agreement, man. Like, when have you known this guy to be, he was the guy that just tweeted on a whim that he's going to take the company public. Like, he does all of this completely eclectic stuff, completely unpredictable, but that's the double-sided coin, right? That comes with all of the execution and sleeping on the production line and all of this other stuff. So my first point is that you cannot control what he does with a simple piece of paper. He's going to do what he's going to do. Number one. Number two, you cannot stop him from doing the exact same thing he did with Twitter. Again, let's say, okay, slap on the wrist. I fucked up, guys. Give me more shares. We give him more shares 2 years down the line. What's stopping him from doing another thing similar to what he did like last year?
Well, he's not going to get more shares then. Shareholders will absolutely turn against him. They won't tolerate it a second time. And I know it'll hurt, as a shareholder a second time. But I think, if the F shares can't be done, non-voting shares, if they approve a compensation package that's something like what Anthony Noto has, that if the stock does not hit this price, you do not get that. That will motivate Elon. It's like, hey, if you want the 25%, you got to work for it. And I know he is. I know he's all over the place. But that'll motivate him, and then he'll really only have himself to blame, although he can blame others too if he doesn't hit those. And if he does hit those, everybody is going to be happy, except for, maybe Gordon Johnson.
I am 1,010% on board with another incentive package. I don't give a fuck if we make Elon a trillionaire, because I will get rich in the process, okay? Tesla will be, a $10 trillion company, and Elon will have $1 trillion. I don't care. But my point is, I, as a shareholder, benefit from that action. if it is an incentive plan. But if it is me diluting myself or whatever, giving him shares up front and hoping in the belief that he will stick to his side of the deal, maybe he will, but it's not guaranteed.
You're only diluting yourself from a voting perspective, not monetarily. That's the difference.
Depends on the package.
Right.
Well, I'm just talking about a F-class share and Elon class
Yes.
share. Like,
Yeah,
you are
that's
not
my
diluting
preference.
yourself economically. You're
Yeah,
diluting yourself with a vote.
Oh yeah, and my preference is, if it's possible, F shares. They make a lot of sense, I think, here. If really all Woody wants is that controlling interest as far as just he's concerned about AI, great, F shares. If it's not possible, then the RSUs. Like if he hits these performance-based goals, and then he gets to 25%, everybody's happy. And I still would vote yes, but I'd be least excited about, hey, let's immediately dilute us right now and give Elon shares up front. That I wouldn't be too thrilled, but I would still say yes. Not fun though.
I just know that in previous interviews that he's given, he has mentioned the desire to step away from Tesla, citing the fact that he never wanted to be CEO in the first place. He sort of just did it because there was nobody else at the time to do it. And that's paid off for us as shareholders. But he knows that, and he's said this publicly, like within the next 5 years or so, he doesn't want to be CEO anymore. He wants to be in SpaceX full time, Neuralink, whatever it may be, doing his own projects. And so my whole thing, I guess my fear is that I don't want this, rosy picture of Elon as a messiah that he can then go and hold all the shareholders hostage for whatever he wants, and people will just give it to him because of his previous historical performance, right? When we know that he's 1 foot in, 1 foot out, at least from an attention perspective.
Yeah, but you can harness that as a power and a benefit because he's going to do it anyway. Like you said, I don't think anybody's going to disagree that he isn't going to do what he wants. Elon is going to do what the fuck Elon wants to do. And there's nobody that's going to tell him otherwise. I would like to benefit from that. And I would like for him to do what the fuck he wants to do under the Tesla banner because we know that he's going to do whatever he wants to do. And I would like to reap the benefits as a shareholder and be able to monetize that because if he brings everything through Tesla, we get paid. He doesn't, we don't get paid. It's pretty simple.
I think that's a fair argument, right? So basically what you're arguing, and keep me honest.
Let him be Elon. Let him be Elon. I just want to benefit from it.
You're arguing that, hey, Tev, I'll take the dilution on the front end with the long dated call option that in 3-5 years, everything that he builds is going to be in Tesla. And I, as a shareholder, will be more, in the green.
Give him his voting rights, make him feel happy, make him stay at Tesla, make him bring all the AI through Tesla, make him bring all that stuff through Tesla. And you know what? He can go off and do all of his passion projects inside the Tesla brand. We don't have to worry about him. I'm not going to say going off the rails because that would be ridiculous because he very well could. But we don't have to worry about him getting pissed off and going and raising $10 billion from ARK and a couple of other funds and doing something on the side. Like this protects us from that because that's a real fear. It's not like this guy can't go raise $10 billion or just say, forget it, I'll fund it on my own. I mean, we don't want him doing that. There's a lot of money to be made, and he is a visionary that has a very good track record of delivering and executing. So I just think that it is beneficial to shareholders of Tesla to keep this guy where he is and allow that to come through to fruition through Tesla. That's all I'm saying. Like it doesn't hurt us economically to give him a voting class share.
And I think the company's not at the point where it can hand off to somebody a little more innovative, but somebody like Tim Cook that just executes. As far as the Optimus and as far as Dojo, those are just, they're too immature, they're too early. Energy business would be fine, EV business would be fine, but for this to actually hit the ultimate bull cases, and of course to add additional products hopefully as well, I think we need at least another 5 years of Elon minimum.
I would like another at least 5 years minimum. Like I do believe the bot will be bigger than the car company, but the bot needs 5 to 10 years, maybe more.
Yeah.
And I'm willing to hold my shares for 15 years if I have to. I don't care.
Yeah. Yeah. I just think that like the narrative, and like I've been sort of in the thick and thin of it with regards to Tesla when it was mass euphoria and when it was mass depression. But I think the narrative has definitely shifted with Tesla being the lowest performing Magnificent Seven stock, definitely against the trend of everything else on a downtrend for a sustained period of time. And a lot of that, flat out coincides with the shit that he's been doing with Twitter.
Yeah,
And
but don't forget, it's not really a Magnificent Seven stock. Like Tesla's an auto company right now. Like, say what you want, 90% of its gross profit comes from automobiles still. Like, it's not generating the gross profit from FSD or autonomous or robots or any of these other things. You look at the other companies in the Magnificent Seven, they're truly technology companies. They're not selling cars.
yeah, but
So I
Steve,
don't know if that's really a fair way to go about it.
so okay, I get you. And I understand that I agree with you. I would make the argument, though, that from a retail investor perspective, from a market perspective, the premium that Tesla got, let's say from 100 all the
Tech
way to
company, no
300,
question about it.
was because of the technology, the AI, and the prospects going forward. Now, that premium is directly dependent on Elon being fucking focused in driving that vision. And if Elon's focus wanders, that premium shrinks. And I think that's what we're seeing.
Yeah, I don't disagree with that by any means. And that's why I want those voting class shares to keep him focused on whatever he wants to do. Doesn't have to be 100% on Tesla. We know it's never been 100% on Tesla. I just want to benefit. Look, Tesla shareholders are not benefiting from SpaceX by any means. Why are we going to let that happen again? Like, if we were smart, we would have freaking figured out a way to get that inside the Tesla umbrella.
That would have been great.
You know what I mean? Like,
Yeah.
so
I mean,
that's
like,
all.
not everything that he makes and creates, turns to gold, but man, for the most part. And yeah, he's an innovator. He does things that nobody else can do. That's really why I'm invested in Tesla. Is I like the EVs. The energy business is cool. It's Elon. Keyman risk, though. I'll give you that.
Huge key man risk. And, I think one thing that we want as shareholders is we sort of want our cake and to eat it too, where we want the Elon premium of like the call option on his brain of what new products he can deliver to Tesla. But we also want every subsequent year for the key man risk to be reduced, where if Elon left tomorrow, how much would the stock price fall? 5 years ago, it would fall 50%. Today, it might fall 30%. In 5 years, it might fall 10% or less.
I'd go the opposite way on that. I think it falls more if he left tomorrow.
Right. Well, right now with the sentiment, probably.
If he left tomorrow, bots go out the door. Dojo possibly goes out there. Like, so many things go out the door. And they will represent a Volkswagen Ford premium. Don't forget, Volkswagen makes more money than that.
I think you're giving him too much credit, man, honestly. Like, the roadmap is the roadmap. That's sunk cost at this point. That's R&D that's already been spent. Like, I don't
You're
think...
assuming that Elon's not going to take engineers with him wherever he goes.
Yeah, I guess that's true.
You're assuming that he doesn't have a bond with these guys. They work arm in arm for so long. They're all wealthy. I would say at least some of them would follow Elon somewhere if he asked.
And just start a new bond.
Yeah, it's not something I want to go through.
Well, so will investors.
If you think about it that way, then going back to the argument around the shares, he already has a gun to the shareholder's head because of the outsized influence that he has over that company. And so him asking for 25%.
Give him what he wants.
Well, that's what I'm saying. It's like,
give him what he wants.
It's a demand. It's not a request.
Doesn't matter. It's a demand that he's going to make us money. I want a happy Elon. I don't want an Elon that's pissed off because I want to make money.
Yep. Yeah, it's a risk no matter what with him. So just give him what he wants. Let him execute.
I know what I'm signing up for buying shares of Tesla. Okay. I'm willing to take the crazy. I'm willing to take the mood swings. I'm willing to take the whole ride.
Steve, you just started this ride, baby. We've been in here for years.
Yeah, because I finally see it.
Are you buying more?
I'm going to buy more tomorrow if it goes down, probably. Yeah, with Sofi. I may wait till Friday to see what the Fed does, but yeah,
Yeah,
Thursday to see what the Fed does. Yeah,
what are we thinking the Fed does tomorrow?
I think
They
that they're
don't
going to have tough talk, and they're going to say with unemployment and all these other things that we're certainly not getting a cut tomorrow. That's not happening.
No.
I don't know. I think he's going to reiterate 4.6% for the year was the median case and try to get the market out of this idea that we're going to get 6 rate cuts. I don't think we're going to get much more.
I think that they absolutely should cut tomorrow, but they won't. There's like
They're not
it's
going.
almost a 0% chance. So, but yeah, tough talk like they always do. I think the market, market goes for phases. Recently has not believed Powell, and then after a little while it does. So I think it might tomorrow, especially with the JOLTS data. So we'll have to see. But it's really weird because sentiment is okay. The market's really strong and the jobs are really strong. The Fed won't cut, and so people are upset about that. And then it's like, oh, but everybody's laying off everybody, and so nobody's going to have a job, and the economy's going to go terrible. It's like, pick one,
I mean,
and that's that uncertainty is
So,
not good for the market. So
he's
guys,
gotta
I got to
project
go.
hawkishness, right? Like he has to keep projecting hawkishness, or like they dropped the ball so slightly in the last call, and the market was like, "Fuck it, we're going to the moon again. We're gonna get rate cuts this year. It's gonna be great." And like that's now consensus view. He's
People
got to come out there
overstep.
and project hawkishness.
They overstepped. He said 4.6 this year, 3.6 next year, 2.9 is where we're going to finish in freaking 2026. That does not mean we're getting 6 rate cuts this year. And if you look at CME Group, I mean, they're projecting some pretty big. They're projecting 150 basis points we're going down this year. Like, that's crazy. It's not happening. But I got to go.
Right.
Bootleg Weekly was great. We're going to take it to Tanner every night.
Yeah, we should do this more often. More bootleg weeklies.
All right. I'll see you guys later.
Let's wrap it there. Roy, any last words for the crowd?
My name is Roy, and I approve of this show.
No.
There we go. We got him, guys.
Better without Tanner. Roy endorses this show, everybody. Thank you all so much for watching. This has been the Bootleg Weekly. We will catch you on Friday for SoFi Weekly.